2022 will be remembered by many Ghanaians as an extraordinary year. We witnessed rampant high inflation, currency depreciation, and geopolitical instability catalyzed by the war in Ukraine. For investors and operators within Ghana's nascent real estate market, this year will see delayed reactions or lag adjustments to the forces that shaped the preceding year. We had a chat with Mr. Ernest Hansen, manager at Beaufort Properties, concerning what to look forward to in Ghana's real estate sector this year.
What are your thoughts on the current state of affairs in Ghana with regards to the real estate industry?
For 2023, we think real estate will challenge other asset classes for institutional capital. But by that I mean pension funds, insurance companies that invest equities and bonds. You'll start to see real estate competing with these asset classes. Pension funds and mutual funds currently have a narrow pool of investable assets to invest in. Like this, I mean treasury bills, bonds, and the stock market. When you've got inflation around 54% and currency depreciation around 55%, these institutions have taken a real beating from CD-denominated investments. The recent debt exchange program will further add to growing pains, and investors are expecting to see losses of around 117 billion, according to a recent report. This leads us to believe that you will see increased demand from investors for alternative investments like real estate investment trusts as vehicles to channel institutional capital towards property. Prime real estate in Accra is sold and rented in USD, allowing pension funds and portfolio managers to hedge and diversify their portfolios.
What innovations can we expect this year?
Another key trend in 2023 is you'll see what we call democratization in access to real estate, which is typically via fractional ownership and REITs. A number of developments in Ghana are already doing it, such as the Elements and the Pelican in Laboni. These projects are already experimenting with fractional ownership. From where we stand, I think this is a welcome development in terms of allowing smaller investors to access prime real estate and enjoy the same dollar yields and currency protection as the typical big man investor in airport cantonments. Fractional ownership is not a new concept and has been around for a while. In the US, people talk about timeshares, etc. Unlike whole ownership, fractional ownership basically, it says what is on the tin. It allows you to own a small fraction of a property, but you still get the same percentage yield as whole ownership. The main hurdle in the growth of this development is the legal framework for such deals and also market education, because people just don't know enough about it. Real estate investment trusts, or REITs, on the other hand, have a written legal framework in place. And we think this is a more regulated vehicle which will sit under the Ghana SEC. We expect to see a few REITs set up sometime this year.
Inflation is high at the moment. What is a possible outcome we should brace for?
A third trend that we will witness this year compared to other years will be pretty large annual rent adjustments upwards for key submarkets. So one of the key features of Ghana real estate is that there are two submarkets, or I call it dual submarkets, with prime rents in dollars and low middle income rents in cedis. And because one of the main features of real estate is that it's a hedge against inflation by allowing landlords to adjust rent annually to match inflation conditions, you'll see that landlords in low middle income cedi denominated market being forced to revise rent upwards by more than double digit figures just to keep sort of the same purchasing power as in previous years. You've also got increasing construction costs that will force mid-market landlords to also demand higher rents in CDs.
What is the outlook on the demand for mortgages in 2023?
The final takeaway, or the final trend that we see in 2023 is suppressed mortgage demand. Ghana's mortgage to GDP ratio is already less than 1% of GDP, meaning most buyers are using cash or pure equity in the construction or buying of their houses. The instability in the cedi over the last 6 months versus the US dollar, we don't think creates conducive conditions for would-be home owners who are looking to take up US dollar mortgages, which is typically the norm in Ghana. We believe mortgage buyers constitute less than 10% of home buyers and are likely to represent an even smaller share in 2023. Lower mortgage demand will be counterbalanced by a resilient off-plan cash market driven by flight away from bonds, treasury bills, and the need to protect currencies and the cedi currency. Quick takeaways or summaries. One, you're going to see increase in capital flow towards real estate. You're going to see new innovations in the sector like fractional ownership and REITs. And finally, you're going to see reduced mortgage demand. However, this will be offset by increased capital allocation to real estate and off-plan buyers still being resilient in the market.